This is Converge, a podcast from Convera. Come with us as we shape the future of finance. Welcome to Converge. Today we'll be kicking off a series of episodes recorded live at Money 2020 in Las Vegas. For the first, we're excited to bring you a panel discussion moderated by the witty and wonderful David Birch of Hyperion. The topic was perception versus reality in the changing cross-border landscape. Who, quote unquote, wins the future? This panel featured Jody, Visser, the COO of Convera, Clow, SVP of Emerging Payments for Bank of America, Pankaj Sharma, Head of Remittances for Remitly, and Tom Dye, Managing Director and Partner for the Payments Vertical at Boston Consulting Group. The panel will discuss who will capture the most value in the cross-border payments ecosystem as it undergoes systemic change in the next few years. With a new emphasis on instant payments driven by non-bank fintechs, crypto-enabled companies, blockchain, etc., who really stands to win the war for market share, and what models and protocols will be at the nexus of this new era? Please keep in mind, and apologies in advance, that this episode was recorded in a very live environment at a major event with over 13,000 attendees, and there is some background noise, as well as a speaker you can hear in the background from our stage. So we apologize for the background interference with the episode, but we hope nonetheless that the content speaks for itself and you truly enjoy this invigorating discussion. So without further ado, perception versus reality in the changing cross-border landscape. Who wins in the future? Live from Money 2020.
Well, hi guys. We're here today talking about what's going on in cross-border and remittance. And I'm joined by people who, I have to say, really know their stuff from a couple of different directions. So what I'm going to do is I'm going to get each of my panelists to introduce themselves to you and tell you a little bit about what it is they're working on at the moment. And then you'll understand why it is I'm so interested in listening to what they have to say. So let's start. I'm going to meaninglessly say clockwise, since nobody who's listening would know otherwise. So, Rich, would you like to go first?
Sure, Dave, thanks. My name is Rich Clow. I lead emerging payments and strategy at Bank of America, and we're really focused on a number of key efforts across everything from our smallest consumer accounts up to our largest corporates, everything in the middle.
Thanks. Jody.
Hi, I'm Jody Visser. I'm the Chief Operating Officer for Convera. Convera is a B2B cross-border payments company.
Hi, everybody. Tom Dye here. I'm a Managing Director and Partner at BCG, the Boston Consulting Group, where I'm part of the Payments and FinTech team and lead the issuing topic for BCG globally.
Hi, everyone. I'm Pankaj Sharma. I'm part of Remitly, Executive Vice President heading their remittance business management function. And Remitly is focused on C2C remittances and cross-border financial services.
Thanks very much, guys, and thanks for making the time to talk about this today. I really appreciate it. I think I'm going to start off with you, Tom, because I know you've done a lot of work looking at the overall market and the dynamics of the market. So just for the people listening, could you give them a sense of the size of the market and perhaps some of the sort of key dynamics in the area at the moment?
For sure. Well, I know that a lot of what we're going to talk about today is the change, the opportunity, and I think that's all going to be good stuff. But it is worth us just remembering kind of what a great space this is, how large it is, and how robust it is. So maybe just some of the headline figures. There's over $175 trillion that's moved cross-border each year. When you dig down into that and you eliminate some of the sort of institutional and trading piece, there's still 40 trillion, which is, let's call it true cross-border commerce across B2B and C2C remittances. And that 40 trillion actually drives a revenue pool of over $90 billion, so massive space. And that space has strong secular growth. So it's growing at around 5% a year. And all of the trends that support that have been consistent for a while. Growth in goods and services spend, growth in cross-border transactions, and a stable share of FX transactions as a proportion of that. So a large space, strong secular growth. And of course, given the size of that space, not homogeneous at all. We have to, when we talk about this space, really be thoughtful about dividing between B2B and then within B2B and C2C and within C2C. So within B2B, some of the key dimensions, of course, being the difference between large corp, huge in terms of volume, actually relatively smaller in terms of the revenue pool, but still critical to the banks for that broader banking wallet that they bring. The small and mid-sized space, which has been a huge growth vector, very significant spread still, and one which has traditionally been a little underserved. And then on the C2C side, massive differences again according to the kind of consumer that's being served and the use cases. And really that comes down to the degree of access to the financial system that those customers have today. So just a lot of diversity, and we can't talk about it in one splodge, as it were.
Right. But for you guys, just talking about those different sectors, is that roughly what you guys are seeing in those different sectors?
Yeah, I mean, I think what Tom mentioned, like it's important to de-average the overall cross-border payments because the challenges and pain points really, are very diverse in that respect. And the lower that you go in transaction sizes, the more diverse the consumer set. When you look at like emerging markets, cross-border, micro SMBs, a lot of cash payouts that happens within remittances as well. And these, especially when I talk about C2C remittances, these have largely been really underserved by traditional large banks or poorly served by traditional remittance players. So if I look at the overall C2C remittance side, the companies like Remitly have had an opportunity to disrupt the space because these have been largely underserved, broadly speaking. And to be honest, like COVID has been a really great push all across within this space where a lot of the consumer behavior is shifting towards digital and providing more and more opportunity in terms of expanding the overall pie of cross-border remittances.
Yeah, what I was driving at this is, Tom is saying it's not homogenous at all, and that's clearly true. Those sectors have some very different characteristics and some very different dynamics. But overall, all of them are growing. You're seeing growth in all of those sectors, yeah?
Yeah, I think in the B2B space, it's a great sector. And I'd say beyond just size, it's obviously customer needs and I'd say verticalization too. So when you're looking at creating new products and serving customer needs and eliminating pain points, you can also look at verticals. So for example, we do the education sector, or we support and serve FIs, etc. So it's not just about size, although that does play into the cost to serve, obviously, and the expectations, because small businesses expect to behave a bit more like consumers in a very digital forward way. But you still have the mid-size and larger businesses that are used to more of the hand-holding and the more consultative sale, especially when you think around something like risk management and their hedging and derivatives needs. So I would say, yes, size does matter, but also looking at the actual customer needs within that. And some of those spaces are growing faster than others when you look across the verticals or the different business models, because we also do a lot of partnerships with embedded payments too. And I think that space is probably one to watch going forward as well.
Yeah, the point about the kind of, the embedded stuff like the API and microservices and all that sort of thing, that is sort of changing the face of this a little bit, because I think for a lot of the businesses that you were talking about, a lot of, like, I'm a small business, right? And so I use Xero or QuickBooks or whatever. It does seem kind of odd to me that, if I'm sending some money to someone in New Zealand, for example, I have to sort of log into another. Like, really, 2023, those things should really be coming together, don't you think?
Yeah. So, David, I agree. I think that the way that Tom laid out the different segments and the types of money movement also require different levels of integration with your workflow, right? Like Jody was saying, there's a lot of data that has to move, with an invoice and a purchase order to settle. But so much of the disruption for consumer-to-consumer accounts, I think, led by companies like Remitly, our focus areas where we, as a big bank, have lots of consumers. We think there are opportunities where if we can just transform the user experience to be better than average or compete with the likes of the emerging players, that we can just retain more of our balances and engagement with our clients, so they don't have to choose another provider because we don't offer wires in Spanish or we don't offer a mobile option. So we feel like if there's more convenience, we can make it better. And then lastly, because if we keep it all in-house and we use our global transaction services organization with branches all over the world, our FX desk, that in turn lowers the cost to serve as well.
Okay, so just as a checkpoint there, we have a huge market which is growing. It's not homogenous, but all of the sectors are experiencing growth. The different characteristics of those sectors actually give each of you guys opportunities to deliver new products and services into that space. So that looks pretty good. Is it fair to observe that the innovation we're seeing in that space, and obviously I'm looking at you, Rich, while I'm saying this, is it fair to observe that some of the innovation in that space is actually coming from the non-banks?
For sure. Yeah, I think for sure.
It's a fair thing to say.
It's a very fair thing to say. And in fact, I'd say that on the whole, U.S. banks were kind of okay with, like, here's the price for a wire. Let's look at our pricing strategy based upon the way all the other banks are doing it. And I think that there have been incredible investments and solutions for clients that were underserved. And they're really challenging us. Like, we have outflows of billions of dollars a year from our deposit accounts because we don't have the right tools and solutions. So it's been a great area of innovation. The other thing I'd say is it's easier because you can use aliases. Like, maybe at the time of onboarding, you need all the details about who someone is you're going to send money to a recipient. But then you can use an alias like a mobile number or email. And many of the models are different, but it's so much more convenient and it's just as compliant. It's regulated exactly the same way we are. So I think that's one of the things that we need to invest in and hear from our clients and solve those pain points so we can get better, faster, cheaper.
Can I just ask, Jody, you came out of Western Union originally, but the platform that you're building a platform from scratch, a new platform to handle all of this?
Yeah, so we're investing a lot in our technology, underlying technology platforms. We have different platforms actually for some of the different segment needs, which makes sense because they built product historically a little bit with a unique platform. But we're moving into more, cloud-based. We're moving more into the ability to do API, to do the embedded payments. And we really, as a non-bank, I think part of the advantage is we get to really go deep on customer needs. So we can pick off use cases and develop specific product features and functionality to help alleviate those, whereas banks are a bit more constrained around core banking architecture and they're managing massive portfolios of spend and where to put it against your broad product offering, whereas we get to go deep and be a little bit more nimble in the way we invest our dollars and quicker to develop the technology to do this. So that's where we're spending a lot of our investment dollars.
Can I just come back to Tom for a second on this? So from what you were saying earlier on and from what the bank and non-bank positions seem to be, probably there are a swathe of banks for whom it's not going to make sense to make the kind of investments that the newcomers or the big incumbents are making. What are the implications of that?
I think that's absolutely right, David. And just like we discussed, not talking about cross-border as a big splodge, you also, I think, can't talk about banks as a big splodge. So to your point, there are some, especially of the largest money market banks, have actually already made a lot of investment around this, especially around digital experience, value proposition, and actually already seeing quite good growth around that. I think there's actually a major divergence you're seeing in the space though. If you're a tier 2, tier 3, tier 4, you now look at this space, it's coming with bigger cost and risk, especially around compliance and operations, as a result of the quite right regulatory pressure and a desire to see a very safe environment. And so really you're looking to other providers to actually pick up that slack for you and take on that responsibility of running the banking network.
So the opportunity for some of these newcomers is actually provide the services to those banks, not directly to the end users.
Yeah, I mean, I think ultimately the reality is it's a large space, so much of opportunity. There are many players sort of innovating in this space, and the partnership between banks and non-banks is essential, supported by regulatory framework. Right. Some of the challenges where when we see it both from a cost perspective as well as how easily you can provide that innovation to the end users is it boils down to risk and compliance side of things as well, right? The fact that banks probably would have to find it challenging to be sort of adapting to the different regulatory frameworks across the board.
Can I just ask you, as a challenger in this space, essentially what you guys are, although a very successful challenger. I mean, you skipped over that very quickly, but the costs of compliance and KYC and AML and those are a pretty substantial barrier to competition in this space, aren't they? It's actually harder to get into this space than people would think.
Exactly. I think it's the cost of risk and compliance within this space to provide. It ultimately boils down to technology solutions, right? So this is why the investment from a technology perspective to bring down those costs. So do that effectively from a risk and compliance side. Do that effectively at low cost is essential. But the regulatory frameworks play a major role within that, right? As the regulator across the globe make it slightly more easier and provide a level playing field and more consumer-friendly regulations, that will go a long way in terms of how technology can actually solve those challenges versus making it more operationally heavy and cost heavy because of that.
I think there is some cause for optimism in that space, though, isn't there? Because the technologies that we have just around the corner, I won't say here now, but when you see what's going on in generative AI, advanced machine learning, the potential to really tackle some of the, like you might call it reg tech rather than fintech, but the potential to tackle some of those costs, actually, that's getting a little better, isn't it?
So long as the regulators come on that journey with us and accept the reg tech solutions and they feel comfortable with the underlying models, etc., that's going to take a while. You've got some regulators that still like wet signatures on documents. So, I mean, we're optimistic. Yes, time frame is the question.
I, as I say, it's not around the corner, but the point is, had we been having this discussion a couple of years ago without the sort of generative AI revolution we've been seeing, I think we'd be a bit more negative about the potential for reducing those costs. That's improved a bit in the last couple of years. Yeah,
I think that we also have to remember that technology is not cheaper than some of the things we do today. No. So once you've got your licenses and you're operating and you've got your compliance team, scale drives that cost down. Keeping up with the trends and making sure you've got good relationships with your regulators and you're doing everything right. I think the reg tech will really help in things like the AML forward sanction screening. To be able to also do that real time will be the challenge, and AI I think can probably drive a lot of help there. But it's gonna be a while.
Hey David, if I could add, in the meantime, things like regulatory reporting are using technology, but you still have to have a person to review it and explain it, right? You still have to, if you need to reverse a wire and you do it before the Dodd-Frank timeline or not. So I think that around the corner might be further than we expect. Okay. And I think that one of the opportunities to accelerate would be a set of regulators, whether it would be between two markets or a broader coalition to align on standards that would enable interoperability across border in a new way for immediacy versus like where we started with Swift, which is a great framework. It served us well, but it's not disruptive, right? They've added technologies to fill gaps, but there is an opportunity at the regulatory level, I think, to standardize.
Yes, I think that's the nirvana, which is around cross-border harmonization around some of the regulatory environment. Because when you're working in cross-border in 40, 50 jurisdictions, you have to customize for each regulator. And that just adds complexity into both your systems and your people management and your processes. And so that's where it's really, really hard.
Excellent point. Okay, that's a good summary of where we are now. And I think I understand that. Let's look at what we're hearing about what's coming next. So, certainly at Money 2020, I've heard a couple of points of view which I think are relevant. So I hear people saying, look, the BIS, the Bank of International Settlements, They're doing these experiments with interconnecting the domestic faster payments networks. It could be that some sort of global interconnected instant payment network is around the corner. It's an interesting point. I've heard some other people say, I mean, not the crypto crazes that we had a few years ago, oh, everyone's going to be using Bitcoin, you guys are all going to be out of business. But, serious people saying, well, actually, we're looking at digital assets very seriously. The ability to move digital assets without clearing and settlement is not sort of an ideological vision. It's a vision based on cost and complexity. So I can see there are other ways forward floating around. What do you guys think about some of these alternatives we're seeing at the moment?
Yeah, I mean, I would slightly describe it as sort of woulda, coulda, shoulda in some senses when we talk about cross-border instant payments. I mean, one thing we should debate is kind of what's the value of instant and where does it apply, right? So I think in B2B, as you described, David, right, just given the order to kind of cash cycle and the timelines involved, the payment component is relatively limited, right? So I think the use case is kind of quite specific in terms of, through some of the specific sort of disbursement type payments which might need to be made. But otherwise, I think, the track record of kind of connecting some of these instant payment networks has been relatively disappointing so far. And I think anything which involves sort of interregional regulatory collaboration just comes with a degree of, stasis and a sort of no one's essentially incentivized really to act and to sort of take risk to solve some of the issues that we're seeing.
And the technical interconnection is a very different problem from the liquidity management and the governance and the operating rules.
Yeah, David, I agree. I think that we're coming to a stage where the technology is the lowest determining factor of how we can get to faster, simpler, less expensive cross-border payments. It's the regulatory framework. And then if you talk about interconnecting domestic payment networks like BIS has experimented with, I think the emphasis is experimentation, right? Because the maturity of our domestic payment networks, right? Like RTP and Zelle in the United States and the domestic payments in UK and SEPA region, all of those have gone through these cycles where we start moving money faster, then scams and fraud find a way to get in, and then it resets us on how we can be more responsible about the way we do it. And I feel like as those cycles speed through, that then we're going to be in a better place for regulation as well as experimentation across two different or maybe multiple immediate payment domestic networks.
Just to come back on one of those points, do you guys see like the demand for instant, or is that something that, like from the technological side, we just assume that instant is the next big thing and that's what everyone wants? I mean, but what do your customers actually want?
Yeah, I think, again, looking at a couple of dimensions over here. One is the fundamental inherent customer expectations that has grown over the years, like with the technology advancement across and various other industries as well. So the customers expect things to be faster. That is there. But the second thing, especially when it comes to money movement, it's the anxiety that comes with the longer it takes, the more anxious the customers are about where is my money, right? That doesn't mean, we conflict that with instant, but essentially that is more about transparency and end-to-end tracking of where the funds are, which is where, it's important to actually look at that. Because if you look at the actual use cases where instant payments are required, like for medical emergencies, they are actually a smaller proportion of the overall use cases, right? So instance, in some cases, speed is in some cases a proxy for peace of mind, but speed is only one aspect of it. The trust is the other aspect of it. And as the, fraud losses increase because of like high speed, the customer trust erodes pretty fast. So you have to balance it out both the aspects.
That seems to be the downside of this, right? The instant sounds good, but when you sort of delve into it, it brings its own problem.
Yeah, it does. Look, I would say in the B2B world, even the use case, we work in an environment where they have net 30, 60, 90 days to pay. And so their processes are really built around there's enough time to pay. And so true instant would be a fringe case. And from our customers' research, they're telling us, pricing, traceability and transparency of where a payment is. And then instant would be a distant third in terms of a need. It does come with other problems. So, for example, if you even define instant, like you still have to be able to do your sanction screening, your AML screening. And so is that technology really really cutting edge to be able to do it in like a second or less? And so it comes with it other investments we'll have to put in place around being able to do that. And then I'd say also, when you need, when you really, really need this, I haven't seen pricing necessarily and cost correspond to instant, like going down, as often you price up for things. If there's truly value there, you end up doing value-based pricing. Yeah.
So just at a higher level though, can I push you guys a little bit more on this? Because in a way I see those two visions as being rather different, in the sense that interconnecting the domestic instant payment networks is like sort of the last evolution of the old regime. And I don't even know if it's worth doing. Whereas serious people, BlackRock and whatever, are going pretty all in on the digital asset stuff. And I just wonder if the future isn't more around shifting digital assets around between essentially custodial, wallets of some form or another. Like the cross-border stuff vanishes into the digital world completely and leaves behind all of the sort of incumbent, legacy systems.
So one perspective on that would be like what you need to believe for that to happen is that all the ways that you need to spend money on rent, groceries, medical, etc., will all receive tokens. And I feel like it's a much higher probability that we'll move the bar in partnerships and experiments to speed and reduce the costs of cross-border cash. The only accelerant there, the only thing I think would happen in the interim would be as certain markets look at CDBCs and CDBCs become easier to track and manage through the regulatory frameworks we're talking about, that could be an accelerant.
If there really was a digital dollar, let's just use the example because we're in the US. So if there really was a digital dollar, like a Fed coin or something like that, I'm guessing there's millions of people around the world who are currently fiddling around with Dogecoin and Dave coin and whatever else coin. Those people actually would be pretty happy to have digital dollars, wouldn't they?
Yeah, again, we have to fundamentally look at from the point of view of what is the use case this will solve, right? And what is the incremental value? Like when you look at the aspects of speed, cost, and transparency, I feel like from a speed and cost perspective, when you look at cross-border remittances right now, they're fairly instant. Like there's a lot of progress that has happened fairly instant. Like over 90% of our transactions are within an hour, and majority of them are within minutes and seconds. Right? From a cost perspective, that has been continuously coming down. So now the question is, while yes, there will be some use cases, but fundamentally we have not seen significant adoption of these digital assets, which goes back to the point around there's the use cases from a customer's perspective are not being solved fundamentally from this perspective, right? So I think it's important to look at from that angle, essentially. Now, there will be, in countries where there's a lot of currency volatility that is happening, then you could argue for, stable coins, store of value in that respect. But ultimately, going back to what Rich was mentioning, like as long as the customers' end use cases utilize the different currencies from that perspective and not utilizing the tokens or those different coins, then this challenge will continue.
So you think the digital asset future is a little further away?
I at least do, yeah. And I think really we're really debating timelines here, because there is I think a good path, and you can see that in the long term that this could create a lot of value, a lot of convenience. But we're really a long way away from that today. The speed of change is going to take a bunch of time. We overestimate the change we see in the near term and slightly underestimate it in the long term. So to me, this is the gradual evolution that will be on for a while.
Okay. So going back to what you guys said about where we are now, putting to one side, going to Mars with Elon Musk and using Dogecoin, what is the change you see in the immediate future? What is actually happening now that you guys are looking at? If you could just sort of finish up by giving me like a little snapshot of the change you see right now.
I think right now, if you look at it, like there's so much innovation and progress happening in cross-border payments. So for me, like I'm really optimistic both in the short and the medium term from that perspective, and ultimately the end consumers will be the winners over here. And the companies that are able to focus on consumer behavior, have the agility to move faster and have a product and technology first mindset to solve these complexities, I think would be the winners at the end of the day.
Look, there's lots of experiment in the space. There's lots of investment in the space. So I think the end outcome will be customers will get a far better experience and a much more digital one. And hopefully in the back end, it drives some of the efficiencies within our networks to also clean up some of the stuff that we've been trying to do over the years. But I do think scale will matter in this sector. I think that the ability to keep pace with the investment required in new technologies, especially things like AI, there are true barriers to entry with the regulatory and compliance world here that I do think scale will matter and that the larger players will end up winning. It doesn't mean that there isn't a place for smaller entrepreneurial firms who find a true niche or solve a pain point either within our operating systems or for the customer that they can win by plugging into some of the larger offerings. But otherwise there'll be acquisition targets for the larger players is what I suspect.
Yeah, I think that one of the key things, two key thoughts. One, at Bank of America, we're really trying to drive how do we better serve our clients, like I said, kind of fill the gap with where the fintechs have led, particularly for consumer-related payments. And then secondly, how can we use our scale to also advocate and engage with the various different regulatory groups or working groups on how we can remove some of these barriers to get to faster, better, cheaper cross-border payments.
Growing the pie for everybody, basically.
Yeah, and for me, it's sort of continued innovation around the status quo and a little bit sort of rising tide lifting all boats. I think one thing you all should be proud of is just the progress that has been made. The outcomes for customers in terms of transparency, speed, reliability, they're a step change from where they were. And I think, to your point, Rich, seeing some of the innovation that the non-banks are pushing, I think the banks learn from that, respond, use their advantages, and the outcome for customers is a better experience, and that's a good thing.
Guys, that was. Thank you for giving me such a terrific picture of where we are and where we're going. I really appreciate your different perspectives. Thanks very much. Look forward to talking to you again soon.
Thank you, David.
Thank you. It's a pleasure.
Thanks.